What if you could invest in something that not only grows in value over time, but also provides you with a steady stream of income? Real estate investing might be your answer. Whether you're dreaming of financial freedom or simply want to diversify your investments, understanding how to get started in real estate can set you on the path to success. In this video, we'll break down the basics of real estate investing, making it easy for even beginners to grasp. So let's dive right into it. Understanding the real estate market. Before diving into real estate, it's essential to understand the market. The real estate market often follows a cyclical pattern, with periods of high and low activity. These cycles can be influenced by various factors, such as the economy, interest rates, and even the time of year. For example, in the housing market, activity tends to peak during the summer. Families prefer to move during this time since it's easier with kids out of school. On the other hand, the winter season usually sees quicker home sales, as buyers and sellers who missed the summer rush are eager to close deals. Location is another crucial aspect of real estate investing. The value of properties can vary significantly based on their location. For instance, a property in a bustling city center will likely be more valuable than one in a rural area. Understanding these market dynamics will help you make informed decisions about where and when to invest. Types of real estate investments. Real estate investments can be broadly categorized into three types: residential, commercial, and land investments. As a beginner, it's important to choose the type that aligns with your goals and level of experience. Number 1. Residential property. Residential real estate is the most common investment type because it's relatively straightforward. You can buy a home, townhouse, or apartment and rent it out to tenants. This can provide a steady stream of income, especially if you manage the property yourself. Alternatively, you can invest in short-term rental properties such as vacation homes, which can yield higher returns during peak seasons. Number 2. Commercial property. Commercial real estate involves purchasing properties like office buildings, retail spaces, or warehouses and leasing them to businesses. This type of investment can be more complex, as it requires an understanding of business cycles and tenant needs. However, it often provides higher returns compared to residential properties. Number 3. Undeveloped and vacant land. Investing in land involves purchasing undeveloped property, which can be used for various purposes, such as farming, building, or simply holding on to until its value increases. This type of investment can be either short-term or long-term, depending on the property's location and potential for development. Investment strategies for real estate. Once you've chosen the type of real estate you want to invest in, the next step is to decide on your investment strategy. Here are some common strategies that beginners can consider. Number 1. Fractional real estate investing. Fractional real estate investing allows you to own a portion of a property along with other investors. This approach lowers the entry barrier, making it possible to invest in real estate without needing a large amount of capital. Platforms that use blockchain technology have made fractional investing more accessible, enabling you to buy digital tokens that represent a share of a property. Number 2. Buy, hold, and lease. This strategy involves purchasing a property and holding on to it while renting it out to tenants. The rental income provides a steady cash flow, while the property's value appreciates over time. This approach is suitable for long-term investors who want to build wealth gradually. Number 3. Restore and sell. Fix and flip. If you're interested in a more hands-on approach, the fix and flip strategy might be for you. This involves buying a property that needs renovation, fixing it up, and then selling it for a profit. While this strategy can be lucrative, it requires a good understanding of the real estate market and renovation costs. Number 4. Wholesaling. Wholesaling is a strategy where you find a property, put it under contract, and then sell the contract to another investor for a fee. This method allows you to make money without having to purchase the property yourself. It's a great way to get started in real estate with minimal upfront investment. Number 5. Real estate investment trusts, REITs. REITs are companies that own and manage a portfolio of real estate properties. By investing in REITs, you can gain exposure to real estate without having to buy or manage properties yourself. REITs are traded on major stock exchanges, making them a more liquid investment compared to physical real estate. Advantages of real estate investment. Real estate offers several benefits that make it an attractive investment option. Number 1. Steady cash flow. One of the biggest advantages of real estate investing is the potential for steady cash flow. By renting out properties, you can generate a consistent stream of income. This is particularly appealing for investors who are looking for a passive income source. Number 2. Long-term appreciation. Over time, real estate tends to appreciate in value. This means that the longer you hold on to a property, the more it's likely to be worth. This long-term growth potential makes real estate a solid investment for those looking to build wealth over time. Number 3. Diversification. Real estate provides diversification for your investment portfolio. Unlike stocks and bonds, real estate is a tangible asset that doesn't move in lockstep with the stock market. This can help reduce your overall risk and improve your portfolio's stability. Risks associated with real estate investing and how to mitigate them. Like any investment, real estate comes with its risks. However, by being aware of these risks and taking steps to mitigate them, you can protect your investment and maximize your returns. Number 1. Economic risks. Economic downturns can negatively impact the real estate market, leading to lower property values and rental income. To mitigate this risk, consider investing in properties that are likely to remain in demand even during economic downturns, such as affordable housing or properties in stable markets. Number 2. Political risks. Political instability or changes in government policies can affect real estate investments, particularly in certain regions. To reduce this risk, do thorough research on the political environment of the area where you plan to invest and consider working with local partners who understand the market dynamics. Number 3. Market risks. Market risks include factors like low demand, oversupply, and market saturation. To avoid these risks, conduct thorough market research before investing and diversify your portfolio by investing in different types of properties or in different locations. Number 4. Technical risks. Technical risks include issues like poor construction quality, inadequate maintenance, or natural disasters. To mitigate these risks, conduct a thorough inspection of the property before purchasing and consider investing in properties that have been well maintained or that are in areas less prone to natural disasters. Choosing the right real estate investment. Making the right investment choice is crucial to your success in real estate. Here are some tips to help you choose wisely. Number 1. Understand the market. Before making any investment, take the time to thoroughly understand the market. Research property values, rental rates, and the overall demand in the area where you plan to invest. The more you know about the market, the better equipped you'll be to make informed decisions. Number 2. Start small. As a beginner, it's wise to start with smaller investments that you can manage easily. This allows you to gain experience and build confidence before moving on to larger, more complex investments. Number 3. Check for value-affecting factors. When evaluating a property, consider factors like location, infrastructure, and potential for growth. Properties in areas with strong infrastructure and growing populations are more likely to appreciate in value over time. Real estate investing offers a world of opportunities, but it's not without its challenges. By understanding the market, choosing the right investment strategies, and being aware of the risks, you can make informed decisions that will set you up for success. Remember, real estate is a long-term game, so be patient and stay committed to your goals. And if you found this guide helpful, don't forget to hit the like button and subscribe to our channel for more valuable insights on real estate investing and other financial topics. Happy investing. Happy